Let me begin with something that may sound strange if you've never lived through real financial terror. The best days of my investing career were the days when the world looked like it was ending. Not the days when the stock market was soaring. Not the days when CNBC anchors were grinning ear to ear, predicting new highs. Not the days when people were bragging about their gains, rushing to buy Teslas and boats, thinking they were the next financial geniuses. No. My best days happened when blood was running in the streets, when fear had swallowed every bit of reason, when people were dumping assets at any price simply because the sight of falling numbers made them physically sick, when the world whispered one sentence that kills fortunes: just get me out, I don't care the price. Those were the days fortunes were made, not because the world was safe, not because things felt good, but precisely because everything looked hopeless. People think wealth is built during sunny days when optimism fills the air. That is completely wrong. Wealth is built during storms when the sky is black, when the world is terrified, when the person who has clarity, even 10 seconds of clarity, can seize opportunities no one else can see. I've lived more than 70 years inside the markets. I've seen crashes that felt like the financial equivalent of earthquakes. I've seen people who were wealthy on Monday and bankrupt by Friday. I've watched Wall Street giants fall to their knees. And through it all, I learned one of the simplest and hardest lessons in investing: when people are scared, businesses go on sale, and when businesses go on sale, fortunes change hands. I learned that lesson most clearly during one night in October 2008, a night the world thought capitalism itself might collapse. Lehman Brothers had just filed for bankruptcy. AIG was being bailed out. Banks were failing like dominoes. Everywhere you looked, panic was spreading faster than any virus ever could. People weren't worried about losing 10% of their portfolio. They were worried that the entire system would fail by Monday. The S&P 500 wasn't falling. It was free falling. It would eventually lose 57% of its value from peak to trough. 57%. More than half of the US stock market gone. And what was I doing? I was buying. Goldman Sachs bought. General Electric bought. Businesses the world believed were finished bought. And I wasn't doing it quietly either. I wrote a full page op-ed in the New York Times with one of the simplest headlines I've ever published by American. I am. People thought I had lost my mind. They whispered, Warren has finally gone senile. Hasn't he seen what's happening? This is suicide. Why would anyone buy when everything is falling apart? Here's why. Because great companies do not die in crashes, only their stock prices do. A 40% drop in stock price does not mean a 40% drop in business value. A 5% crash does not mean a company is worth half of what it was worth last week. Fear moves faster than logic. Panic spreads quicker than truth. And in the short term, markets behave like emotional creatures. But here's the secret: the business behind the stock is calmer than the stock itself. Factories don't disappear. Brands don't evaporate. Customers don't vanish. Cash flows don't suddenly die. Fear distorts price. But fear does not change business reality. That is why the greatest opportunities appear only when fear reaches its peak. And that brings me to what this video is truly about: not theory, not vague principles, not maybe ideas or someday concepts. No, I am going to tell you exactly which 5 stocks I would buy the morning after a 40% market crash. Not 5 random tickers, not speculative long shots, not risky bets. 5 businesses I would bet my life on. 5 businesses built to survive anything short of nuclear war. 5 businesses I understand more deeply than I understand the weather. But before I reveal them, you need to understand something critical. Knowing what to buy is useless if you don't understand why you're buying it. The real power isn't in the names. The real power is in the principles behind the names. Because a crash is not a normal time. A crash is a psychological battlefield. And on that battlefield, only 4 things matter. 1, a business with a moat, a real defensible advantage, something competitors cannot copy, the kind of power that survives recessions, wars, pandemics, and mistakes. 2, a business with cash flow. Cash is oxygen during a crisis. Companies that generate their own cash survive. Companies that depend on borrowing suffocate. 3, a business with honest, competent management. In a crisis, management makes or breaks everything. Bad leaders panic, good leaders act. 4, a business you fully understand, because when the world is falling apart, only one thing stops you from selling: understanding. Understanding is the antidote to panic. People don't panic because the world is scary. People panic because they don't understand what they own. When you deeply understand a business, you can hold it through hell. And trust me, there will be moments that feel like hell. When the headlines scream that capitalism is done, when your portfolio bleeds red, when your hands shake every time you open your brokerage account, when every voice around you tells you to sell. In those moments, knowledge becomes courage, and courage becomes wealth. That is why this video exists, not to entertain you, not to sugarcoat the truth, but to prepare you. A 40% crash will come someday, maybe soon, maybe years from now, but it will come. History guarantees it, and when it comes, you must be ready, truly ready. Not emotionally ready, not theoretically ready, but financially ready. And when that day arrives, when the streets are red, when the screen bleeds, when the world is frozen with fear, that is the day you will buy. When the market crashes, I don't rush to my trading desk. I don't stare at charts. I don't look for price targets or technical patterns or Fibonacci levels. No, I look for fortresses. And the first fortress on my list is a business that has survived everything the world has thrown at it for more than a century. A business so deeply embedded in the fabric of the global economy that even the Great Depression couldn't break it. A business that keeps growing year after year, crisis after crisis, recession after recession. A business whose product is consumed by billions of people every single day. The first stock I buy in a 40% crash, Coca-Cola. Now, before you roll your eyes, before you think, Warren, come on, Coke is boring. Let me tell you something, boring is beautiful. Boring makes you rich. Boring is predictable. Boring is safe. Boring is what survives while exciting companies go bankrupt. Boring is the foundation of wealth. And there is nothing more deceptively boring and unbelievably powerful than Coca-Cola. Why Coke? When you think of a stock to buy after a crash, people imagine something like Tesla, Nvidia, or some hot tech company trading at 200x earnings. But crashes punish the flashy. Crashes expose hype. Crashes destroy illusions. But crashes cannot destroy what is already unshakable. Coca-Cola is unshakable. Let me explain why. One, Coke doesn't sell soda. It sells a ritual. People think Coke's business is sugar water. It isn't. Coke sells a feeling, a moment, a habit, a ritual practiced by billions of humans for over 130 years, a ritual that continues through wars, recessions, pandemics, job losses, inflation, political chaos, market panic, when the world is falling apart. Do you think people give up their one Coke? No, people stop buying new cars. They delay vacations. They cancel luxury purchases, but they don't cancel the small things that bring comfort. Coke sells comfort, and comfort doesn't go out of style. Two, Coke's business is a money printing machine. I love businesses where the product costs pennies to make, but sells for dollars. Coke syrup is one of the highest margin products ever invented, one of the cheapest liquids to produce, one of the most profitable liquids to sell, one of the most addictive flavors on earth, one of the most globally recognized brands in human history. People drink Coke everywhere, airports, restaurants, gas stations, cinemas, stadiums, every street corner in America, every neighborhood from Brazil to India to Africa. And even if stock prices fall, people keep drinking. That is the definition of a crisis-proof business. 3, Coke has the widest moat in beverage history. Moat means what protects the business from competition. Coke's moat is massive. Let's count it. A brand dominance, a distribution networks no competitor can replicate, 200 plus countries, billions of daily servings. Boy, a market machine that has shaped global culture, manufacturing, and logistics has built over a century. If you gave me 100 billion today and told me, Warren, go create a competitor to Coca-Cola, I would hand the money back and say, impossible. That is what a real moat looks like. 4, Coke survived 100 years of crisis and grew in all of them. Let me list just a few events Coca-Cola has survived. A world war, the Great Depression, a World War II, a oil crisis, double-digit inflation, the 1970s, a dot-com crash, the housing collapse, a global pandemic, a 2020 market crash, every recession in U.S. history, not survived, thrived. When I invest after a crash, I want a business that doesn't just recover. I want one that becomes stronger. Coke becomes stronger after every crisis because bad times make weak competitors die. When weak competitors die, Coke gets even stronger. 5, Coke's dividend never stops. In a crash, the stock price falls. But what happens to the dividend? It keeps coming. Like clockwork, year after year. Coca-Cola has increased its dividend for over 60 straight years. That is not luck. That is discipline. That is reliability. When the market crashes and everything is falling, I want a business that sends me checks every quarter no matter what. The most important reason I buy Coke in a crash This is the part people don't understand. When a great business like Coca-Cola falls 40%, it doesn't become a risky stock. It becomes the deal of a lifetime. People forget this. Price is not value. Price is emotion. Price is panic. Price is fear. But value is the business. And the value of Coca-Cola doesn't fall 40% just because investors are scared. Stocks fall faster than businesses fall. That gap between price crash and business stability is where wealth is created. How I think during a crash, let me tell you exactly what goes through my mind when I see Coca-Cola drop 40%. I don't think, oh no, I'm losing money. I think, oh good, the world has given me a discount on a cash printing machine. I don't think, what if the market keeps falling? I think, will people stop drinking Coke? No, then I'm buying. I don't think this is scary. I think this is the time when fortunes are built. And that leads to the core principle in a crash, buy the business, not the stock. If the business is unbreakable, the stock price is irrelevant. Coke is unbreakable. Comes next Coke is the first stock I buy. Not because it is exciting, not because it is innovative, but because it is eternal. Now we move to the second stock on my crash day list. A company even stronger than Coke. A company whose products you use every single day without thinking. A company with deeper roots, wider reach, and more global dominance. And I promise you this, the second stock is the one Wall Street always underestimates the most. Let me tell you something nobody likes to admit, but everybody deep down knows is true. Most people don't lose money because of the stock market. They lose money because of their behavior. And behavior, my friend, is shaped by incentives, the invisible hand that controls everything from your salary to your decisions to your life outcomes. This is the law I learned early on. You do what you're incentivized to do, not what's smart, not what's logical, what you're incentivized to do. In every environment, your job, your friends, your family, your society creates incentives that either keep you trapped or push you toward freedom. Let me take you back to a moment that slapped me across the face. I was 25, working insane hours, grinding every day like my life depended on it. And one night, after 17 hours straight, I asked myself a simple question. If I work harder tomorrow, do I get paid more? No, I didn't. If I bring in millions of dollars for this bank, do I get a slice of the upside? No, I didn't. I was on a fixed salary. If the company made 100 million, 500 million, or nothing, my paycheck was the same. That was the moment I realized I am being incentivized to think small. Not rich, not free, small. Because the system didn't want me to be a thinker. It wanted me to be a worker. And here's the truth most people never wake up to. 99% of people are trapped not by poverty, but by the incentives of the environment they live in. Digester, let me explain. Incentive trap A1. The paycheck illusion. Every young guy thinks the paycheck is the reward. It's not. A paycheck is the price the system pays you to forget your dreams for one more month. That sounds harsh. Good, it should. Because when you rely on a paycheck, you automatically adopt paycheck thinking. I'll take fewer risks. I'll avoid discomfort. I'll play safe. I'll do what the boss wants. I won't build anything for myself. You know what wealthy people earn? Not salaries. Equity, ownership, leverage. A salary is a prison with a nice cafeteria. Ownership is the key to escape. But the system never teaches you that. Schools don't teach ownership. Jobs don't teach ownership. Parents rarely teach ownership. The system teaches you roles. Rich people learn incentives. Incentive trap bank 2A. Comfort addiction. Comfort is the most expensive addiction in the world. Why? Because comfort makes you slow. Comfort makes you passive. Comfort makes you accept. Good enough. Look around you. People aren't broke because they're stupid. They're broke because they're comfortable enough to not change, but miserable enough to complain. Comfort creates a psychological trap where people postpone decisions, avoid risk, delay investment, numb themselves with entertainment, fear change more than mediocrity. If you want wealth, I'll give you a rule. Make discomfort your baseline. Comfort is for people who lose. Every major wealth decision I ever made, every trade, every deal, every investment came from a place of embracing discomfort. Incentive trap went through on emotional investing. You want to know the easiest way to predict who will stay poor. Find the person who reacts emotionally to markets. The person who buys high because it feels good and sells low because it feels scary. That person will never keep wealth. Never. I've watched this cycle for 40 years. Greed makes people buy. Fear makes people sell. Ignorance makes them repeat it. Every market crash I've seen, 1987, 2000, 2008, 2020, had one thing in common: the majority of the population acted on emotion instead of incentives. You know what I did during crashes? I bought. You know why? Because my incentive was wealth creation, not emotional comfort. My incentive was to find mispriced assets, not to soothe my panic. See, when you structure your life around real wealth incentives, here's what changes. While others panic, you hunt. While others freeze, you evaluate. While others cry, you calculate. That's the difference between a player and a spectator. Incentive trap point 40, the social circle ceiling. You want to know what keeps most people poor. Not lack of money, lack of environment. If you hang around people who live paycheck to paycheck, who complain about the economy, who brag about how much they spent, not how much they invested, who want entertainment, not education, you guess what? You become the average. Here's a rule that changed my life. Your income will rarely exceed the expectations of your peer group. I don't say that lightly. If your friends think investing is risky, building a business is stupid, saving is boring, debt is normal, government is responsible for their LIFA, congratulations, you voluntarily capped your potential. When I started surrounding myself with people who had ownership, capital, leverage, and ambition, my life changed. Because environment determines incentives. If your circle rewards stupidity, you stay stupid. If your circle rewards discipline, you become disciplined. If your circle rewards wealth creation, you become wealthy. It's not motivational, it's math. Incentive trap 15A. Time misallocation. Let me show you something that will make you uncomfortable. If I watch how you use your time for 48 hours, I can predict your financial future for the next 20 years. Most people allocate time in ways that guarantee poverty. They work for wages, they rest for entertainment, they invest zero time into skill building, they avoid anything that feels mentally demanding, they prefer passive consumption over active creation. Here's the uncomfortable truth: if you spend more time consuming content than creating value, wealth will avoid you. Wealth flows to people who create products, businesses, solutions, ideas. Leverage, value, consumption creates nothing. Creation creates wealth. Once you fully understand that, your time becomes your biggest leverage. Not your job, not your boss, not your paycheck. Your time, the escape. Let me tie everything together. If you want to escape the invisible forces holding you back, here's the formula. 1, change your incentives to change your behavior. 2, change your environment, change your expectations. 3, change your time, change your future. You don't need luck. You don't need connections. You don't need genius. You need a life structured around incentives that make wealth a natural byproduct. That's the secret, not motivation. Incentives, motivation fades, incentives compound. Once you understand that, your entire financial destiny shifts. Let me tell you a truth that most people never realize until it's too late. The people who win in money don't win because they're always right. They win because their system makes them win even when they're wrong. And the people who lose, they lose not because they're dumb or unlucky, but because they have no system at all. They improvise, they guess, they react emotionally, they hope. Hope is not a strategy. Guessing is not a system. Emotions are not a plan. If you want wealth, real wealth, wealth that compounds, survives crashes, grows in chaos, and protects your life, you need a system. So let's break down the structure, the architecture that turned average people into millionaires and turned me into a billionaire. 1, the system must make decisions for you, not emotion. Every beginner thinks they need motivation. They think they need discipline. They think they need confidence. You know what confidence really is? A system that protects you from your worst impulses. Let me show you the difference. Poor investors make decisions like this. The market looks scary, let me sell. This stock looks hot, let me buy. Everyone says recession is coming, let me sit out. This news headline is alarming, better exit. They react to noise, and noise destroys wealth. Rich investors, we follow systems. Predetermined buying levels, predetermined selling levels, predetermined holding periods, predetermined risk thresholds, predetermined asset allocation, predetermined rebalancing rules. Because when the market starts screaming, your brain stops thinking. The system keeps you sane. 2, a good system removes 90% of your decisions. You want to know why I beat almost everyone? Not because I knew more, because I decided less. The average investor makes hundreds of decisions a year. Most of them are wrong. The wealthy make a handful of decisions per year. Most of them are structured to win by default. Let me give you something brutal but true. If you need to constantly make decisions to protect your money, you've already lost. The market will beat your emotions, your fear will beat your logic, your impulses will beat your strategy, But a system beats everything. Think of a thermostat. It adjusts automatically, it doesn't panic, it doesn't react to headlines, it just executes. Your wealth needs the same logic. 3, the system must not depend on genius. Listen carefully. If your wealth strategy only works when you're smart, calm, focused, and perfect, you're screwed. You have bad days. You get tired, you get emotional, you make mistakes, you get influenced. Your system cannot rely on you being brilliant. It must work even when you're distracted, emotional, or irrational. Because you will be, that's your humanity, that's your psychology, and that's precisely why a system saves you. 4, the system must be boring, not exciting. People chase excitement. They want the thrill of picking the hot stock, the adrenaline of timing the market, the dopamine of gambling on the next big thing. You know what wealthy people want? Predictability, consistency, repeatability, boredom. The wealthiest portfolios in history were built with boring systems, consistent buying, consistent holding, consistent compounding, consistent risk control, not hype, not excitement, not drama. If your system is exciting, you have a gambling addiction, not a wealth strategy. 5, the system must make you wealthy automatically. Let me explain something that took me 15 years to fully internalize. You don't build wealth manually. You build wealth mechanically. The system does the work, not your motivation. A good system forces you to buy when things are cheap, forces you to hold when emotions say sell, forces you to sell when you have enough gains, forces you to stay consistent, forces you to avoid destruction. Without a system, you are prey. With a system, you become the hunter. 6, the system must survive chaos. If your strategy only works when the world is calm, it is worthless. You need a system that survives recessions, inflation, deflation, market crashes, rate hikes, geopolitical shocks, unemployment spikes, bubbles, long drawdowns, sudden volatility. Wealthy people design systems that survive chaos because chaos is predictable. Crashes aren't rare, they're routine. If you understand that you never panic, you prepare, and preparation is profit. 7, the system must limit downside and let upside run. Average investors do the opposite. They cut winners too early. They hold losers too long. They panic when something rises. They freeze when something falls. That's how you guarantee mediocrity. A real wealth system cuts losers early, rides winners, long prevents catastrophic loss, captures long-term compounding, increases exposure. When high-quality assets get cheap, limits exposure. When things get overhyped, the secret is simple. Small losses plumb massive winners to long-term wealth. But your emotions won't allow that. Your system will. 8, the system must be built around value. This is where most people fail. They copy someone else's strategy, a YouTuber, a guru, an influencer, a billionaire, a friend, a trader. That's deadly. Your system must match your risk tolerance, your timeline, your personality, your income, your goals, your financial psychology. If you build a system that doesn't fit your psychology, you will abandon it during stress. We don't want that. Your system should feel like a tailored suit, precise, balanced, and made for you. 9, the system must turn time into your business partner. Wealth is not built through intensity. It's built through duration. You can be intense for a year, but can you be consistent for a decade? That's what a system guarantees. It turns time into an ally instead of an enemy. The system compounds your capital while you live your life. You don't chase wealth. Wealth chases you. That's the dream everyone wants, but only the systematic achieve. 10, the system must make your future inevitable. Let me leave you with this. When people say rich people got lucky, they don't understand the game. Luck is a variable. Systems are constants. The poor rely on luck. The rich rely on systems. Build a system so strong that even if you try to fail, you accidentally become wealthy. That is the billionaire mindset. That is my mindset. And that is the mindset I'm giving you. In segment 5, we go deeper. We talk about something most creators never touch. How to engineer your financial life so that wealth becomes a default setting, not a dream, not optional, inevitable. If you've been paying attention, you've probably noticed something. Everything I've shown you so far is about control. Controlling your incentives, controlling your system, controlling your behavior, controlling your destiny. But now we go deeper, because here's the truth nobody tells you. Wealth isn't something you chase. Wealth is something you engineer, like a machine, like a factory, like a well-designed engine that produces the same output no matter what the world throws at it. Poor people rely on motivation. Middle-class people rely on hard work. Wealthy people rely on architecture. So let's build your architecture. Let's design your life so wealth becomes the only possible outcome. 1, Engineer the environment, not the willpower. People say, I need to be more disciplined. I need to work harder. I need to stay focused. No, you don't. You need a different environment because environment beats willpower 100 times out of 100. Let me give you a harsh truth. The average person is not lazy. They are simply in a system where laziness is rewarded. Look around, your job doesn't reward extra effort. Your school didn't reward creative thinking. Your friends don't reward ambition. Your society doesn't reward long-term discipline. You're trapped in an environment where comfort is easy, excuses are normal, distraction is constant, mediocrity is socially acceptable. Wealth requires the exact opposite. When I started transforming my environment, everything changed. I surrounded myself with people who made wealth normal. I removed people who made excuses normal. I filled my life with systems that made progress automatic. If your environment normalizes greatness, you rise. If your environment normalizes mediocrity, you drown in it. 2, engineer your identity. Become the kind of person who gets rich. This part will sting, but you need to hear it. Your identity is the ceiling of your wealth. You will never outperform the story you tell yourself. If you believe, I'm not good with money, I just want stability, I don't need to be rich, I'm not smart enough to invest, I don't want to take risks, you've already lost. Not financially, psychologically. You've built an identity that chases safety instead of growth. I'll tell you exactly when my life changed. When I realized I needed to stop trying to become wealthy and start trying to become the kind of person who is wealthy. Those are not the same things. The second one is identity. Identity changes everything. Wealthy people think long-term by default, tolerate discomfort, prioritize investments over consumption, study markets, not gossip, manage risk like oxygen, operate from logic, not emotion, structure their life like a business, measure themselves, not others. If you don't adopt the identity, you will sabotage your own wealth at every step. Identity is destiny. 3, engineer your time. Turn hours into assets. Time is the most misused resource on earth. The average person uses time emotionally. The wealthy use time strategically. Let me break it down simply. Poor people trade time for money. Middle-class people trade time for comfort. Wealthy people trade time for multipliers. Multipliers are skills that compound systems, that automate investments, that grow networks, that expand decisions, that reduce future decisions, habits that simplify life, assets that earn. While you sleep, every hour you spend must either build something, automate something, compound something, leverage something, increase your future freedom. Most people waste hours to save minutes. Wealthy people waste minutes to save decades. 4, engineer your income engine. Build leverage, not labor. If your income depends entirely on your effort, you are capped. If your income depends on leverage, you are limitless. There are only 4 types of leverage you want. Capital, money that works harder than you. 2, code technology that scales infinitely. 3, content media that spreads without effort. 4, people teams that execute your vision. If your life doesn't contain at least one of these, wealth will always feel uphill. Notice what's missing? Hard work. Hard work builds a foundation, but leverage builds wealth. Don't confuse the two. 5, engineer automatic wealth. Make the default action a rich action. Let me tell you the real secret of the wealthy. We make it harder to fail than to succeed. That's the goal. Not to be perfect, not to be brilliant, not to be superhuman, but to design your life so that you automatically save, you automatically invest, you automatically build, you automatically grow, you automatically improve, you automatically remove risk, you automatically protect wealth. You want the default to be rich. The path of least resistance should lead to success. If your life is engineered correctly, failure requires effort. Mediocrity requires intention. Procrastination becomes expensive. Success becomes automatic. This is when you know you've won. 6, engineer the feedback loop. Measure what actually matters. You manage what you measure. Most people measure entertainment, comfort, pleasure, status, feelings, speed, comparison, approval. Wealthy people measure net worth, cash flow, asset allocation, risk exposure, skill development, hours invested into growth, compounding rate, long-term trends, annual progress, systems efficiency. Here's a rule. You cannot improve what you refuse to examine. Wealth is math. Progress is math. Compounding is math. If you're not measuring, you're not growing. You're guessing. Guessing is for amateurs. Measuring is for winners. 7, engineer your emotional framework. Become unshakable. Let me tell you something that separates billionaires from the rest. We feel the same fear you do. We just don't let it control the machine. Your emotional framework must be engineered so that fear triggers analysis, not panic. Greed triggers caution. Not recklessness. Boredom triggers consistency. Not gambling. Setbacks trigger strategy. Not quitting. Emotions aren't your enemy. Uncontrolled emotions are. Engage with your emotions. Just don't follow them. Your system follows logic. Your emotions follow instinct. You choose the commander. 8. Engineer your exit strategy. Wealth requires protection. Wealth creation matters. Wealth protection matters more. Every wealthy person I know has cash buffers, insurance buffers, risk bust buffers, portfolio buffers, opportunity buffers, psychological buffers, because wealth without protection is wealth waiting to die. Your architecture must include capital preservation, risk reduction, asymmetry, defensive positioning, shock absorption, liquidity access, crisis protocols. We don't hope the future is calm. We prepare for when it isn't. Preparation is profit. The inevitable future, if you build everything I just showed you, identity, environment, systems, time, leverage, income engines, emotional structure, buffers, then wealth isn't a dream. It isn't luck. It isn't motivation. It isn't talent. It becomes inevitable. The way gravity is inevitable, the way sunrise is inevitable, the way compounding is inevitable, wealth becomes the default outcome of your life. That's what I want for you. That's why I'm teaching you this. And in segment 6, we go even deeper. We break down the billionaire blueprint, the exact psychological and structural map wealthy people follow